Hey everyone, Couch Investor back with the second video of the night. First one was about Block, Square. If you missed that, it's going to be in the top right corner. In this one, let's talk about PayPal. We're going to talk about PayPal, the earnings report. Last time I talked about PayPal was not such a positive video. That was about the $2,500 fine that they might charge some PayPal users if they spread what they say is misinformation. That came out, suddenly they removed it, and apparently a couple of days ago I saw that they might have put it back, or maybe they never removed it. I don't know. Anyways, the quarter was actually a solid quarter. Margins are going up again, quarter over quarter, free cash flow going up again as well, so quite a good place right now, but the stock is down around 10% or so, depending on what time you're watching this video. So let's go and have a look at this quarter. If you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. Tomorrow's video will be about Mercado Libre, a company that really never ceased to amaze me. Another solid quarter, so expect that video to be up before the market opens on Friday. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So, first thing I want to show you is this, the diversified global payments company with multiple growth drivers. So back in 2018, this was the pie, $578 billion. Right now, we're well over $1.25 trillion. That's in 2021. So they say here that, maybe let me scroll a bit up so you can see everything here on the right. So on an FX neutral TPV, so total payment volume, 3-year CAGR, PayPal branded checkout, which is the blue one, is at 26% CAGR, unbranded processing 40%, Venmo 55%, P2P x Venmo. Also, by the way, PayPal branded checkout, that is, they say here, does not include volume associated with eBay or PayPal P2P. Now, with regards to unbranded processing, that is primarily comprised of Braintree, the full stack volume, and does not include gateway exclusive volume. Unbranded processing also includes unbranded credit and debit card processing on the PayPal platform. And as for the third one here, P2P x Venmo, that is primarily comprised of PayPal P2P volume with some contribution from Xoom, Xoom, not Z. And then the other merchants services, so that includes volume associated with invoicing, payday, payouts including Hyperwallet, point of sale solutions including Zettle, QR code, etc. And then eBay, to be expected, that's down 11% and will probably be, well, close to zero the next quarter. So why I wanted to show and start with this is basically to show you the company is pretty diversified when it comes to the products and services that it's offering, and it's growing. As you can see here, 2018, 2021, obviously we had the pandemic in between those periods and now coming out of it, but we're not getting any smaller. Well, that pie chart will not be getting any smaller. And now as for total payment volume, or TPV, that increased 9% year over year, or 14% on an FX neutral basis to $337 billion. Now, of course, we have a number excluding eBay, yes, still this quarter. So that increased 10% on a spot basis and 15% on an FX neutral one, on top of 31% spot and 30% FX neutral growth Q3 2021, and on a 3-year spot CAGR of 26%. Now, when it comes to Venmo's TPV, that increased just 6% to $64 billion on top of 36% growth in Q3 last year, and on a 3-year spot CAGR of 32%. Now, the same thing here as we've seen with Block, they're giving us the 3-year CAGR. Why? So we get the fuller picture. We're not getting a number isolated just from the pandemic. We're getting one a bit before, a bit in between, and then coming out of it as well. So you get a mix of everything, which, to be honest, is a much better number to look at. And now as for transaction and engagement. So they ended the quarter with 432 million active accounts. That's up 4%, including 35 million merchants account. They added 2.9 million net new active accounts. Now remember, they said at the start of the year that they're focusing on high quality active members and not those that just use it once and that's about it. Also, this includes absorbing higher churn impact from minimal engaged users that joined during the pandemic. So, okay, not that bad. Also an increase quarter over quarter here. They processed 5.6 billion payment transactions. That's up 15%. Excluding eBay, transactions grew 17%. Now, as you can see, since Q2 2021, transactions per active accounts has actually increased each and every quarter, are now over 50 transactions per active account. And I do believe that this will just increase. And this just shows that PayPal as a product is working. Because if it wasn't working, we would have seen that number decrease each and every quarter. Now, when it comes to revenue, that grew 11% year over year, or on FX neutral basis, that grew 12% to $6.84 billion. That also beat the consensus by around $30 million. So good on that. Again, they beat on earnings per share. They also beat on revenue. It's just the guidance that maybe, was negative, or maybe that's what the bots were looking at. And that's why the stock went down after hours. Is down after hours, because overall, as you will see, it was a good quarter. And although, yes, maybe revenue for the full year is a bit lower, they did raise a bit when it comes to earnings per share. So I don't know what happens there, but that's the picture right now. Now, of course, here we have a number excluding eBay as well. So that grew 13% at spot and 14% on an FX neutral basis. Transaction revenue grew 11%, driven primarily by Braintree. Excluding eBay, transaction revenue grew 13%. Now, they do say here something very, very interesting, especially going into, 2023. So hedging gains recognized in international transaction revenue were $156 million in this quarter versus hedging losses of $44 million same quarter last year. Now, exiting Q3 at exchange rates as of September 30, 2022, our derivative positions are estimated to result in the recognition of $504 million of hedging gains in international transaction revenue over the next 12 months. Pretty interesting. And now, as mentioned at the start of this video, you can see your GAAP and non-GAAP operating margin are going up for the first time in a while. And this is why they highlight this actually. First quarter of positive incremental operating margin since Q2 2021. Very, very important moment probably in, the long-term journey of PayPal right now, coming out of the pandemic, coming out of that eBay, let's say, time period era. So good to see. And now when it comes to earnings per share, so non-GAAP earnings per share declined 3 cents relative to Q3, but it did come in at $1.08, which beat consensus by 12 cents. So there is that. As for the GAAP EPS of $1.15, that includes a net gain of 34 cents related to strategic investments compared to a net gain of 13 cents in the same quarter last year. And of course, free cash flow. In my opinion, when you invest in PayPal, this is an important metric here because you cannot expect 20% growth or so going forward, but growth in free cash flow that you can expect. So this is exactly what we're seeing here. You can see here an increase from Q1 2022. Each and every quarter, it goes up. They say here highest organic quarterly free cash flow in PayPal's history, $1.8 billion, 37% increase, and 26% of revenue. It's probably behind my face. So here you are. And they say here that in Q3, for every $1 of revenue, PayPal generates 26 cents of free cash flow. And this might even grow. Who knows? And what do they do with all that cash? Well, as you can see here, yellow is dominating. What is yellow? Stock-based compensation. So they generated $28 billion in free cash flow since becoming an independent company in July 2015. In Q3, they returned $939 million in capital to stockholders by repurchasing around 10 million shares at an average price of $93.93 per share. Quite a nice number. Year to date through Q3, they returned $3.2 billion to stockholders through share repurchases, and since separation, allocated $15 billion to share repurchases and $13 billion to acquisitions and strategic investments. And to be honest, if the stock continues to be this low, this cheap, they might continue to repurchase like this each and every quarter. And now as for the full year guidance. So net revenue is expected to be around $27.5 billion. And I have here the other number right besides me from the prior outlook of $27.85 to $27.87 billion. So that's a bit lower, but they say here they are raising expected non-GAAP EPS by around 16 cents to $4.7 to $4.9. So in my opinion, that's a bit better than this little miss here, let's say, in net revenue. But then again, I'm not the market. And they say here down that share repurchases expected to reach $4.2 billion, free cash flow of over $5 billion. So that's quite nice. Net new actives expect to add around 8 to 10 million. Of course, at the start of the year, that number was much, much higher, but they already explained that a couple of times. And as for Q4, the same thing here. They're raising expected EPS and targeting return to non-GAAP operating margin expansion. So revenue is expected to grow 7% at spot and 9% on FX neutral basis to $7.37 billion. Non-GAAP EPS at the midpoint of $1.19. And with regards to the operating margin expansion, they expect it to be around 22.5%. So to conclude, as the title or the thumbnail says, this was a solid quarter. After a couple of quarters of being extremely weak, shall I say, this is finally a solid quarter with, to be honest, a clear vision, a clear path to growth and coming out of the pandemic. Of course, right now with high inflation, current macroeconomic environment, FX hits, of course, it's not going to be extremely easy, but it's a solid quarter. That's all you can say. A company like PayPal is a solid compounder, free cash flow positive, as we've seen, returning cash to its shareholders each and every quarter. So that's what you're buying, basically, a solid compounder, and you can expect the company to return capital to its shareholders. So that's about it for this video. Obviously, do share your thoughts down in the comments below. Are you a buyer? Are you a seller? What do you think about this quarter? Let me know down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the Mercado Libre video. Bye-bye.